Joining our closing bell exchange today is Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments, Matthew Cheslock from Virtu Financial, and Rick Santelli at the CME Group. So, Matt, is this continued buying chalked up to the fact that we were oversold, or are earnings providing a real upbeat reason for enthusiasm?
Well, the reasons we saw last week for the sell-off, there were multiple reasons. We're not seeing the dollar react today. It's been pretty stable. We're not seeing any reaction in the 10-year, so that's been pretty stable. Those were reasons why we saw the market sell off. So we were in an oversold condition. So what are we going to see? We're going to see equities being bought, and I think it doesn't really give us an indication of if the market's going to go higher or hit all-time highs. This is probably some kind of smaller bounce in between. We held the 200-day moving average, which is important, the other day. So technically, we're right in the middle of the range, and we still lost about 700 points in the Dow over the last week. So we're not out of the woods yet.
Victoria, it's tech and the likes of communication services that top the list in terms of sector performance today. What do you take from that the initial sell-off and profit-taking, the names that outperformed, is done and dusted, and those stocks can be off to the races again?
Well, I think, as Matt mentioned, when you've had the sell-off that we had last week, we took about 5% off, and people started then to take a step back and reevaluate what's going on in the market. We had the financials come out with those strong earnings, and that kind of set the tone probably for what we're going to see with earnings. Netflix, as you mentioned earlier, will be a big story. So as they do that, I think people start reevaluating and coming back into the market. Obviously, the FANGs and the tech stocks have been a huge component of the market growth this year, and so it doesn't surprise me that we are seeing some of a rebound there. I think Netflix earnings this afternoon may tell a story as to if we continue to see that or if they start to reverse again.
Rick, as Matt mentioned, not a ton of action in the bond market or the currency market, but we did get a lot of economic data, which you broke throughout the morning. What's your overall takeaway after that really strong jobs number and some of the other data points we got?
Well, I was very impressed with industrial production. Capacity utilization is also hovering near extreme levels of this cycle. But really, JOLTS was quite astounding to think that we've had two numbers now over 7 million when the first 6 million handle was just the spring of last year, and this data series goes back to December of 2000. But I somewhat disagree. Just because we have an active trade in a tight range in treasuries certainly doesn't mean it isn't speaking volumes. Whether stocks went down or stocks go up, it still looks like the fourth day in a row we're going to close within a basis and a half tight closing range in tens, 315 or 316. That's telling us something. I think this market is really perched, ready to move to the next level of rates. It's just going to take some distribution. And with respect to the dollar index, I totally think today's trade was super enlightening. 95 has been just the talk of the trading floor. A lot of traders like to trade the dollar index. And when it violated that, you could just see the sell stops. The thing just dumped down, and then it started to fight back as stocks were doing well. I think the dollar index is important, and I think maybe it turned because of JOLTS and potentially because of what is going on with the equity markets. At some point, whether we cross back over 26,000 in the Dow, I do suspect that the long end, just about 6-7 basis points away from their high cycle yield closes, is going to be a whole lot more responsive. It might be going sideways, but it's doing it on some pretty good volume numbers.